Good morning, everybody. It's June 14th. This is the weekly review where we take a look at what happened last week, what we think is going to happen in the coming weeks. Today, we're not going to spend all that much time on kind of review because honestly, not that much happened. It was pretty much a sideways week. You can see it here in the numbers. Markets really didn't go anywhere, just kind of hung there. We'll focus a little bit more on some particular charts and some particular ideas, but if we shoot up here and look at the technical fundamentals, really the strength is in the NDX, the NASDAQ, the Russell. So if we pop over and take a look at those guys, we'll start with the NDX because the NDX is trying to do the retest regen on the weekly time frame. If we've looked at this before, so it's probably no big surprise. You've got this swing point high here, and as it goes over it, right, and comes back into it, it's testing and it's trying to break down or to regenerate higher. Either way, it's going to give us some information. The fact that it comes back within 6 bars says it's probably going to try to get towards the bottom of that bar. That bottom is here, and as you can see, that's exactly what it did. What does it do? It does almost a little doji. It closes back near the high. This thing's going to try to regenerate higher. The other thing that's happening is you've got the high volume high here that it wants to try to test, right? When you get those high volume highs sitting out there, there's a good chance that you're going to try to test those. Now we have quad witching showing up at Friday. We've got the Fed this week. We've also got the Greek question. So there's a lot of things out here that could actually shoot this thing up to test this by the end of the week. I'm not predicting that's what's going to happen. I'm simply saying that there's enough cards on the table out here this week that we could see something like that take place. So on the NDX, you've got this bullish retest and trying to regenerate higher on the weekly time frame. If we look at the NASDAQ, right, the NASDAQ itself is holding up pretty well. So you've got it breaks at the swing point low, right, back underneath it, gets back over but can't hold it. And this is, even though this is a kind of a negative here, you can still see prices holding pretty well. So you go up, you test over it, you close inside of it. So you're still inside this bearish retest regen zone. But in the larger scope of things, right, you're still holding this larger range, on the top side. So, when I look at the NASDAQ from a relative standpoint, looks pretty good. Now, if I go look at the Russell looks even better. Now, the Russell, has been one of the weaker of the indexes for the most part. Nothing hugely wrong with it. It's just done, bullish ABCD structures on the upside. It's the one that, even though it continues to struggle, it continues to try to point higher, and what it's trying to do is get back up here to test this swing point high, which happens to be the high of the breakdown bar as well. So I like the way the Russell's behaving. The Russell is more domestic, less international, so it has less exposure to what's happening elsewhere. The other thing that I would note is that Friday you actually saw volumes decrease, right, as the pullback ensued. And so if we go back and look at, let's just take the NDX for example, on a daily basis, the NDX was coming up to do the retest regen, the bearish. So as it was doing that, it started to pull back on Friday, but volumes really shrunk, declining. That's a positive, not a negative. The question now is, will this thing actually set up the change, to where you come and do a little ABCD structure to the upside, right, to try to point it back up to test those highs that we keep talking about, or will it really fail and come on back down? And that's going to be the big question this week. So we'll be looking at that. That will be the focus point. But other than that, not a lot really happened. So those bearish retest regens are still trying to regenerate lower. You've got the positives of the Russell, the NASDAQ, NDX. You've got the Fed decision this week and the Greek question. Those are the big things. Overseas, Asia remains near the highs, and that's a big positive for the world markets, in that these markets continue to look strong, because it's hard to go more than a day without seeing something about bubble talk in Shanghai and China. yet Shanghai and China continue to hold up. Now, there is the possibility that we just did a little test over the top and we're going to get some sort of a range, but so far, the ranges just haven't developed. Any kind of pullbacks continue to get bought. You can see the long tails on every time you get a pullback. You get a long tail. In other words, you got buying pressure at the end of the day that drives this thing back up. So, when I look at this chart, I can't find anything negative with it. If I look at the Japanese index, did get a decent sell-off. We actually bought into that sell-off. The only issue with that is that the regenerate, and this was after 6 bars, so this tells us that this index is not nearly as strong as we'd like it to be. In other words, if you go more than 6 bars up here and you pull back, that should be an automatic buy. And even though it has worked out that way and that you got the spike back up, it ended up 2 days under that bullish retest regen. That's kind of a negative. That tells me more than likely this thing is going to trade sideways for a while, some sort of a range. That means that range could come back into lower price zones. And so, we need to push stuff out as it rises and expect to buy it back cheaper as a result of the way this looks. It's a positive in that, the yen, we had Kuros come out and tell us that the yen was declining too fast. That gave us a big spike up in the yen, which is what pushed this down. But that yen is going to continue to decrease over time. So eventually this market will go higher again. So just like we've talked about in Europe, and we continue to talk about in Asia proper, we want to be able to buy retraces on the expectations, right, that these long-term trends are going to continue, right? And so, when I look at Japan here in a long term, and this is the Nikkei, right? You had a consolidation, and if you go back and you look at this push up, right, you've got the same thing going on here now, right? It's a question of how high will it get? Does it consolidate a bit before it goes up higher? I do suspect that this thing is going to climb higher over time, and we just have to simply believe that the longer term trends are what we should be trying to trade, and at least trading in the direction of whatever those are. That's the whole ideal between buying and selling on these retraces and trying to build positions, which we'll talk about here in a few seconds. And I've talked about before, but I'll talk about a bit more. Let's see, what else? The Asia, the high volume weekly time frames, we already talked about that. Financials. The financials continue to look pretty good. Whether we're talking about the big caps, which is the XLF, so the big money center banks, they made a new high. They're coming back. They're going to do a full retest regen. They've been slowly working their way higher. Here's the weekly chart. And you can see they're just grinding back up there to the top. Going to try to test the top, or actually did test the top, had more volume. So I suspect they're going to hang up here and try to go higher. So much of what you hear is that the rate rises on the curve, the yield curve is actually going to fall to the bottom line of these banks, and that's what's really helped them. But it's not just the banks, it's pretty much any financial right now. If we look at the broker-dealers doing the same thing, just a big steady rise here. Look at it on a weekly, making new highs as well. You can go to the regional banks, any of those ETFs you want to look at. You got the same sort of thing, volume buildup, breakouts, pushing to new highs. And even the the insurance, right? I was surprised to see the insurance spike as much as it did last week. Now this is a more narrow index in that the volumes are not that great, but still the trend is higher, and that's even in the insurances, which I didn't expect. But when you think about it, what's really happening is as interest rates are rising, that's putting some bids under all these financials, because most of that rise is going to fall to their bottom line. And on the insurance companies, of course, they're going to get more revenues buying the bonds or whatever it is that they're buying in the fixed income space, and that's going to help their bottom line. So I'm surprised at how well the financials, not surprised, but I see how well the financials are doing. It's a big piece of the S&P 500. that's underlying support. If I look at the negatives, France and Germany are trying to do these regenerate lower. But just as I was talking about earlier, you don't see the volume expanding here, right, on this pushback down yet. And that may actually be the big question, right, that is, or not so much question, but the big indication here. You push back down, you don't have the volume as you test back into that prior low. This actually looks like it's going to try to regenerate higher. And I don't know what's going to happen with the Greek situation, and that's the big part of what's happening here. But if it does, that's going to change this back to some sort of a sideways consolidation versus an expansion of that range that we've been in. This is the French CAC. The DAX looks about the same. If you pull this over to the weekly, it actually held underneath that prior low, right, and actually held this low as well. Volume here 6.2, volume here 6.1. So you hit it with almost the same amount of volume. Yes, you hold it again. This looks more positive than it does negative, even though we did expand the range some. Overall, it held pretty well. If we look at the DAX, the DAX, of course, the weaker one, but the DAX also held that low. Volume there 1.1, volume here 862, so you come back down, right? This also looks like it's going to try to set up some sort of an ABCD structure to get it higher and throw it back into a consolidation versus this downtrend it was trying to do, right, or actually was doing. So that consolidation move, if it does that, right, a positive development, and says that somehow, some way, they're going to find some sort of a solution on the Greek situation. On this one, of course, it's been weaker. It broke last week. This week does a doji. Range expansion, still doing fine. Almost comes into this bar. The top here was 10,704. You got to 10,864. So you're not that far away. It could expand down into here off of whatever news comes out this week. But this does look to me like it's trying to hold and potentially turn around. So it's a negative in the fact that it's trying to extend downward, but Friday looks to me positive more than negative. And so, even though I put it in the negative chord here, I kind of like the way it's starting to shape up. The structure for a larger decline remains on the table. I've talked about this before, and even though the structure remains on the table, right, we still haven't seen it actualize in any serious form. We had one swing point break on the short-term time frame, but outside of that, we haven't done anything more. Now, there are a bunch of swing point lows down here to where if this does push back down, if this really is a regenerate lower, and if we take and stretch this ABCD structure, let's say that the Greeks fail and we don't get a resolution. Well, we'd break another swing point low. There's another one here too. And we would get a couple of these that could propel us a little bit lower, right? That structure is in place. And if we come back to the weekly, we still haven't tested this low. We're 5 bars into it. If we go 6 bars this week without getting underneath it, this one will print as a low. And then at that point, you'd actually have the situation of where a break here breaks on this time frame as well. Again, multiple swing point breaks, multiple time frames, that can send you lower. If it does, right, then these become the target and so forth. So even though the structure's there, so far it's just not actualizing. And by seeing what I say and what I do, I'm not expecting it to actualize. All I say is that it is there, and if it starts to, then we need to be a little bit more concerned about it. Secondary world markets, this is something we haven't talked about much. I just wanted to point it out because, I've been watching it happen, and it continues to happen more and more. And I'll use the Indian market as an example. You get a break here on a swing point low. That's also a break on the weekly now. This thing is slowly rolling over, and we're seeing this in a number of these kind of secondary markets overseas to where you're getting this rollover effect that's starting to take place. And all these markets made huge moves up, especially the Indian market. Now, I'm not concerned that this thing's going to crash and burn. As a matter of fact, I think this area down here is a buy. And if this Indian market actually right about there, if it comes back into these bars after all this period of time, if it comes back into these bars, it's probably a place we want to buy. And so if we if we find price back down into here, and it's just a continual drop to the downside, it's probably going to represent a good buying opportunity in these in this particular index. But what I wanted to point out was not so much is that a buy, and I would treat it as one, but we've seen this elsewhere. If I look at the all ordinaries, you've got the same thing going here, right? This thing continues to trend to the downside, did not hold the retest regen, right? This changed it sideways on this time frame. If I look at if I go like say Taipan, the Taipei market, Taiwan, this one had broken down. We talked about that big spike up, got totally taken away. These are not crashing and burning, but they're certainly not going up. And so on these secondary markets, for whatever reason, we're seeing more and more weakness, even though we're holding up in the majors for the most part. So it's just another kind of auxiliary type information that is something worth watching to see if it continues. The debt instruments continue to see pressure. So when I look at, let me grab the TLT. Even though this one is trying to stabilize, so far this thing continues to fail on all of its attempts to get higher, and it regenerates lower each time. And so there is an ABCD structure in place here that can take it a little bit lower. As the bonds go down, the yields go up. That's what's helping those financials that we looked at. But at the same time, if this gets out of control on the downside, it becomes a problem. On the weekly chart, it's actually a doji underneath back over, so it's kind of positive. So it looks to me like it's going to try to level out. But it's not just here. It's pretty much across all of these. If I look at municipal bonds, they're doing the same thing, right? Going down, testing lows. If I look at high quality corporate bonds, they're doing the same thing, just a little less weak, but they're doing the same thing. They've broken down, yields have gone up. If I'm looking at high quality corporate bonds, that says that corporations aren't able to borrow as cheap. That's going to hit their earnings. If I look at junk bonds, right? Junk bonds also feeling the pressure, down, breaking lows, breaking it on the weeklies as well. So all across the debt structure, we're seeing a rise in interest rates. It's kind of the market saying rates have to go up independent of what the central banks are saying, because as we know, they keep flooding the markets with currency. So I wouldn't say this is a red flag. I'd certainly say it's a caution flag, something to continue to watch, because if they do, right, as long as they trade in the ranges, people get used to ranges. In other words, I've seen this big spike before, so as long as I'm in this area, I don't worry about it so much. But it's when it starts breaking new ground. In other words, if it's down here, it becomes an issue. And so if we continue to see these head down and the rates go up, at some point it becomes an issue. And that's what you watch these things for. Changes that will reflect in the charts that will have either fundamentally positive or negative effects. Talking about fundamentals, Greek question's the big question this week. It could go either way. I think that there's some bettering of the economic data points finally. We saw some sentiment numbers look a lot better, but in particular, the retail sales looked a lot better. Are people going to save their money, or are they going to spend it? Retail sales, 70% of the GDP. If people start spending their money, we're going to have to build more stuff. There's going to be an increase in inventories and so forth, and that's going to propel the economy. So this is a big number. We'll have to keep an eye on it and see if it continues. But it was a positive. It's the first time I've seen a positive of any size since last fall. So it's been 8 months or so. What to watch this week? I think there's really two things. Do we see the ranges expand in Europe to the downside? Last week they did. Will they continue? Are we going to retest, regenerate lower? Or is that half full glass really going to materialize and we're going to see the bounce back up? There's going to be some sort of Greek resolution, so forth. Will the debt market continue to generate lower? If it does, right, I suspect that's going to become more of an issue. We got the Fed this week. If the Fed really signals in a hard way that rates are going up in September, we may see some fallout from that in these debt instruments. So I think that those debt instruments are already reflecting that more so than expecting more of that to happen. So I suspect what we've already seen is those starting to adjust, those markets starting to adjust as to what the Fed is really telling us they're going to do. Economic earnings, not much earnings. They're about a month away. You know, the big questions out here this week's the Fed and the Greek situation. You got the Fed here on Wednesday. That's going to be the big news. Also notice that quadruple witching out here on Friday. You got the Bank of Japan with a decision on Thursday as well. So those are the big things. A couple more data points out here with the Fed, Atlantic Fed, and the Philly Fed. So some data next week. Really, it's these two data points. This and whatever happens in Greece, and then quad witching on Friday. What's the bottom line? You know, they gave us very little in the way of clues longer term last week. You know, I think the fundamentals and the technicals still look reasonably positive. There's negatives and positives, right? They both playing against each other. Both of them could take effect. I don't really know which one is. All I know is we're stuck in a range, and we just have to keep reading it one by one. You know, I see retest regens failing, and I see them succeeding. And, you know, in either way, eventually one or the other is going to take precedent, and we're going to get a directional move again. I suspect in time that will be to the upside. In the intermediate term time frame, short term time frame, it's more chop. It's the same thing we've been seeing, and what we should do, as we have been trying to do, is we should take advantage of that by buying the chop. In other words, when we go down, we buy, and that's what we did last week. We had a sell-off early week. We bought into it. Wednesday it popped back up. We sold one of those issues, but mostly we increased our position size. If we get some sort of a resolution to Greece, or if the Fed somehow surprises and says, you know, yeah, we may raise those rates, but we definitely aren't going to raise them very much, or whatever, you know, comes out of this, and the market pops, I think it's more likely the Greek situation if it's going to pop. That's a chance to sell off some of this because the expectation is we're going to continue this range. Last week we added a lot of stuff. Sold one thing, got enough of a pop on Thursday or Wednesday, I guess. Sold one thing, didn't get out of, just trying to get out of a trade on DXJ, didn't quite get out of it. So we're there, we're in a bunch of positions. We've increased our portfolio size. Don't want to increase it too much more at this price point. Maybe another couple things. There's a really hot sector. Pan WI put in Palo Alto Networks as a potential trade if it pulls back, because that sector is extremely strong. But outside of that, you know, it's mostly overseas, not here, right, that we want to be dealing with. I've got a couple positions. We added Apple back. Let's look at a couple of these, and I'll show you what I'm looking at. You know, an Apple, as Apple pulled back into the top of this low, right, that was a good place to try to buy it. I bought one early, bought one right at that price point. Next day it traded down but back up, goes up. The problem is that it failed at the 129 level. And in the TNT room, I was talking about that all week. This was the zone it had to get over. It failed right here. That projected it back down. It's going to come test this area one more time. And so if I put this back in this area here, that's what it's going to test one more time. And let me draw that correctly. This is a little bit lower. Right about there. So I suspect it's going to come back into this. That will be the price point where I expect it's going to try to, you know, push back up again. If it doesn't, right, and if it really does come down here and test all these lows, it could break back down on a weekly basis, right? It could break back down into this weekly area where it broke out. Swing point high is around 119. You've also got this low sitting here at about 120. What is that, 121.63. So somewhere in that zone would be the zone to probably buy again if we're going to. Elsewhere, let's look at the others. What was the other one I was going to talk about? Oh, EWH. EWH is the Hong Kong market, and one of the things I've talked about recently is that there is a nice support zone right here at the gap, right? And I'd kind of been waiting on this, and we didn't buy this until we came back there finally. And the ideal is that, yeah, this thing is going to look like it's breaking down, but more than likely the buyers are going to show up at this price point. And sure enough, you know, it got down, changes trend, and the buyers show up, and boom, you're right back the other way. This is a big range trade at the top. As long as Shanghai remains strong, right, this market is probably going to trade in this range. Could it expand? Sure. And if it does, it's going to expand a long way potentially. You've got this zone up here, and you could expand that zone down to here. Is it going to do that? Most likely not. It's probably going to hold up here. It's probably going to trade this range for a while longer. And eventually, what's the idea? Well, eventually the idea is that this thing expands back to the top side. So if we look at a weekly chart, right, you can see the zone that was down here before, right? This thing expands up, and now it's trading in this zone. Could it expand all the way back down to here? Sure, it's possible. Is it likely? Right now, no. It's probably going to trade this range for a while, just like it traded these ranges before. Will we get an extension to the upside eventually? Well, the idea is that, yeah, you probably will. Just like you saw it here, you'll probably eventually come out of this and trade higher. So you buy the range, you buy the dips in the range, you just try to be patient and wait on them. As they come back in, you take some on, you flip some initially, you buy back down again, eventually you try to build a position. So, ideally, you're going to get 2, 3, 4 times in this range places to buy. It's a one-sided trade because it's bullish. And so what you're trying to do is you're trying to say you get a 10% size on the first time, then you get it to 15, then you get it to 20, then you get it to 25, whatever it is. You keep building it in this range until it eventually breaks higher, and hopefully you've got enough on at that point that you can ride it higher and have bought it at these lower ends of the range. And so you'll have a lot of profit as you bust out. That's the idea. Let's see. The rest of them are the same way. HEDJ, HEWG, same thing. The only thing I'd talk about there is that eventually, the euro at some point, and let's pop up the euro right quick. Let me grab the FXE. At some point, I'm going to go to the weekly chart. At some point, the euro is going to regenerate lower or just continue lower. Right now, the euro is doing this range thing down here at the lows. Could it pop higher? Yes, it definitely could. If it does, the hedge trades are not going to do as well. At some point, this thing is most likely going to do a continuation outside this consolidation and push lower. And my expectation is that we'll push down to the 85-90 area probably. If that's true, those hedge trades, you're going to see the European market finally take off, and the hedge trades are going to hedge out this currency and allow you to take advantage of the push up in the equities. So the ideal here is to continue to build those equity positions as this consolidates. And eventually when it starts to break again, equity positions in Europe are going to go up, and you're on the hedge trade, right? You're going to hedge out the currency. Now when it gets to wherever it's going, whether it's 80, 85, 90, whatever the number is, you want to move out of the hedge trades and into the non-hedge trades for whatever is left, because those non-hedge trades are actually going to trade lower as the euro sinks. And so if I go look at, we could look at, where is the EZU, for example. If we look at Europe, this one is consolidating in a better way, right? If you look at this and you think about the hedge one that we're in, this one's actually doing better. Why is that? Well, because the euro itself is going up, and that's hurting the hedge trades. Whereas here, that's not hurting this. This is simply consolidating. So if we look at this, you can see it's a long way from its highs compared to the hedges, which had gone up to those highs and got over them. Eventually, as this drops, when the European currency drops, this will be where you want to move to, and it's probably going to be down in this price point. This is where you're going to want to move to for the final run in the European markets. And so the ideal here is that if you stay in this longer term, and we're talking 6 months, a year, year and a half, whatever it is, you want to shift out of the hedge part of the trade into a pure play, which takes the currency out, and so that when the currency continues to press higher, you'll get the benefit off the currency in the EZU or some of these non-hedge trades. So that's something we'll be looking at. Okay, I've run over here. I'm going to drop it at this point. What do I expect this week? I think it's all about Greece. I think it's about the Fed, more about Greece than anything. Greece has to either kick the can or solve the problem or default. One of those. It's going to have a huge impact. You got quad witching on Friday. If the Greek question looks like it's going to get answered or gets answered earlier in the week, that quad witching could push us quite a bit higher. Go test those tops on the NASDAQ and NDX. If the Greek question fails, right, and we actually do get a spike lower, I suspect that spike lower is going to be temporary and you're going to want to buy into it. So that's kind of where we're at. We'll just see what the market wants to do, and we'll play it as we always do based on what the signals are that are given to us. That's it for today. Thanks a lot. If there's any way I can help you, let me know. Take care. Goodbye.